Well, let's turn our attention over to the grain markets now. This week, we're joined here in the studio by Heather Ramsey from the ARC Group. Heather, great to see you.
Hello, good to see you.
Well, there's lots to talk about, of course, when it comes to the grain markets. There always is. That's nothing new. But we've got harvest underway, portions of our viewing area today. I imagine you're getting some phone calls, hearing some yields out there.
Yes, we're hearing a variety of yields around dryland corn, a little bit of dryland beans coming out. I would say the easy estimate is that we're 50% off of what we expect in these areas for corn. There are some better areas than others, but for the most part, kind of south central part of the state that's come out has been wildly disappointing. Probably not versus kind of what the growing season was, just in general, way behind what averages look like at this point.
We factor that into the conversation, the weekly conversation of the crop progress report and what USDA is says is happening out there. Kind of confirms of what the producers are seeing. The crop condition across the U.S. continues to deteriorate, especially in this area.
Yeah, it definitely confirms that. The one thing that crop condition doesn't do a good job of talking about is this test weight discussion that's been happening. What we've seen off of that early corn is low test weight. We're notoriously seeing 56 plus pound test weight on corn in our area. Dryland corn is hitting somewhere between 50 and 53, and that is significantly low for us, and that obviously will affect final crop size once you get through the field.
I want to come back to harvest conditions out there and some decisions that producers will be making coming up in a second. But first, I want to go to, I suppose, some of the headlines that we saw this past week. Black Sea grain deal is in the news again. Is it happening? Is it not happening? My question for you this week on that topic, sounds like it's not happening right now. How much does the market pay attention to that at this point, considering how many times we've gone back and forth?
Yeah, obviously we've gone back and forth on that several times over the last 2+ years now, right? I mean, it seems crazy that it's drug on this long. And I think because of how long it's drug on, every about 6 to 8 weeks, we have a discussion about this. The market really has slowed down its participation in the reaction to this. The other thing is it's notorious that this sort of a conflict or maybe a skirmish happens on a weekend, and then, oh, now we're going to talk about it on the beginning of a week. And by the time all of that has happened, we've digested that there's not a lot of additional structural infrastructure damage that has happened paired with a non-existent resolution, and then the market kind of doesn't trade much of that at all. So been very quiet on that reaction from the market in regards to what's happening over there.
So we take a look at the futures market, corn and soybeans. We'll tackle corn first. Is there a bullish story, something to give some folks optimism out there in the future side?
Today, it doesn't look like it. Yes, a decrease in crop size, shortened supply. If you have a shortening of supply, that should mean a reaction, a favorable reaction. However, because our export demand has not gained enough traction quick enough here, so far, that doesn't look like its own standalone bullish story. Now, I will preface that by saying that demand does usually pick up when prices have backed off again, and we are starting to see a little bit of that happening. When you look at the world in general, we have done more sales of corn and beans globally into China than any other time in history. At some point, all of those numbers get digested, and has the world sold enough versus what our supplies were, stocks were, to just warrant an additional uptick. So we've got to accumulate some more export sales kind of globally and domestically to really try and change that trajectory. Corn may be the lucky beneficiary of a potential bull story in soybeans, but right now it doesn't look like it has its own standalone legs, so to speak.
Well, expand a little bit more. What is the bull story when it comes to soybeans?
Everybody loves to love soybeans right now. So the crush margin is phenomenal in soybeans. On the board, we're looking at the range has been anywhere from positive $2.50 to $3 plus per bushel margin, positive margin. So that is wildly positive. We have a shortening of the crop going on. It is very apparent that this isn't going to be a record-setting crop that we were looking for in the soybean world. Demand has not slowed down whatsoever. Domestic demand on soybeans is just massive, to the point where we're not really concerned about having an export market on soybeans. Processing, the biofuels, all of that, just through the roof. Crude rallying is helping soy oil and things like that. So the whole outlook looks very positive. Pair that with another northern hemisphere oil seed having problems, that's canola production being low. It just really pushed everything over into that soybean usage instead of, you know, backstopping canola with soybeans. So that whole picture looks very, very positive. There are some key numbers that if you see production like below a 52, below a 51, and heaven forbid we get to 50 or lower, those would all be stair-step increases in price reaction. I expect soybeans to stay very volatile. Most everyone expects to see soybeans volatile to the top side. There's always some correction happening there.
Keep a close eye on that, of course. So that's the future side of it. And at the local side, we've got the cash, the difference we call basis. How are basis levels out there?
You know, historically, they're still pretty good right now. I mean, we saw some sensational stuff last year, and everyone kind of needs to wipe the slate clean on that. There is some front-end pushes for early delivery corn, so be sure to take advantage of those. If you've got dryland corn coming out now, there are hot spots that are looking for that. We're seeing positive basis levels in that side of the world, usually delivery by the 15th of September, so kind of a quick ship. And then on soybeans, we're actually seeing fairly favorable soybean basis for September, even into October. If you look at the bid structure, you can tell they're looking to continue to push to buy beans all the way through to January at this point. If you have those futures on that we talked about, we've got great carry to incentivize you to take what you need to on a quick ship standpoint, put the rest in the bin, roll carry, and then capture those basis appreciations post-harvest. Looking for that December, January, February timeframe to continue to be our hot spot for both beans and corn post-harvest.